Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now on this one, the top shadow is the longer shadow. And ideally, we want to see that top shadow be at least twice as long as the body. So I'm giving you the pieces right now. So the top shadow is at least twice as long as the body, and the bottom shadow could either be non-existent or it should be less than the body length. So there are the pieces. Relatively small body, top shadow that's at least twice as long, and bottom shadow that's the body length or less. Now, if we see this happen at a resistance, we look for the confirmation. We get the confirmation. Now, that's the entry point where we get a red candle that closes lower than the shooting star. That falls into the same kind of category would happen at the bottom of a downtrend. Some of you may already be familiar with what this one is, but essentially the same kind of thing. We have a downtrend in place. So we have lower highs, lower lows, red candles lining up. And down here, we get this candle. This is called a hammer. And on a hammer, we would look for this to occur at the bottom of a downtrend on support. So the shooting star occurs at a resistance. The hammer occurs at a support. Notice how these two are essentially the same candle. The only difference is the orientation, that is, which direction does the long shadow point, and whether it occurs at the top of an uptrend or the bottom of a downtrend. But they're essentially, if that were a Lego piece, it would be the same Lego piece. Just a matter of where you place it and how you position it. So this falls under the category of initial reversal, but yet they still require confirmation. Then we're going to go into the third category, and this category is reversal category, which is what we consider to be self-confirming. Once you see these occur, you don't have to wait any longer. They are in and of themselves the confirmation. And the example that we're looking at on this one is what's called a bullish engulfing candle. Its corresponding signal would be the bearish engulfing candle. But let me just describe the pieces to the bullish engulfing candle. What we have is we start with a downtrend. So again, red candles, lower highs, lower lows. Now at some support level, so we might have a support that looks like this. I'll just draw a line on there. That would be a support level. So at the support, we have this candle that shows up, which is the green candle. Now there's a couple important parts to this. Number one, this has to gap down at the open. So in order for an engulfing candle to be created, you have to have the price of the open gap in the direction of the initial trend. I'll say that one more time. For an engulfing candle to be created, the price at the open has to gap in the direction of the initial trend. So our initial trend here is a downtrend. That means the opening price of the engulfing candle has to gap down. That's the only way that a truly engulfing candle can be formed. So you notice that it's a green candle, which means the open is down there at the bottom. Now, at some point, it then moves higher, and what creates the engulfing then is, the second part of that is that the close is higher than the top of the previous candle. So basically, here's what we say. This green candle completely engulfs this red candle. Now, the only requirement is that the body engulfs the body. That is, the rectangular part engulfs the previous rectangular part. But it's also additionally helpful if this green engulfing candle also captures the shadows. But it's not required. It's like it's just adding a little extra strength to the signal, if you will. So this would be considered an engulfing candle. When could you take the trade then? Well, you could take the trade at the end of the day or the end of the period of the engulfing candle. Any questions that you see coming in, Shawn? anything you see? If not, you want to go ahead and pick up roll reversal?
Yeah, I don't see any questions coming in, but by all means, bring them on. Rick, can you go back to the previous slide here? There's something I wanted to point out about this one too. So I'm not too interested in looking at a doji or a spinning top to enter a trade, but I am okay with some of the reversal patterns. So for example, that bullish engulfing pattern, the thing that I like about those is that if I'm going to go into a trade, I want to be able to figure out where I'm going to need to exit that trade. So the nice thing about these kinds of engulfing patterns, doesn't matter to me if it's bullish or bearish, is that I can pretty much put my stop order below the low point there. So below the bottom shadow there, I can put my stop order in to automate the exit. That usually gives me a pretty tight risk parameter there. And because I'm expecting that this is going to be a full reversal pattern, usually there's a pretty high level of resistance there, so I've got pretty decent risk-return ratios here. So I'm usually able to pick up a few more contracts in this case, or a few more shares when I take a trade like this. Now, what I might do is I might scale into the trade. I might take a smaller position upon this kind of reversal pattern here, and then if the trade goes my way, I might add to that position. But I like this because typically, I'm taking small amounts of risk. Either I'm right and the trade is indeed going to reverse and continue to the upside in this case, or I'm going to be wrong and we're going to break down. We're going to break down below the low point from today. I'm going to get stopped out. I take a small loss. I move on to the next trade. So I do like taking trades on these, though.
Excellent. All right. I'll go ahead and move forward if you're here we go.
Yeah,
And
Farshad just says for
reverse.
entry. And I believe that's you're asking me is would I take that as an entry trade? And the answer is yes, I absolutely would. But I might scale into it because again, we've all heard the trend is your friend, and you're trying to time a reversal point. Well, at least you're trying to time it based on some technical support that the trend is reversing more now than it maybe was a couple of days before. So it's still going to be going against the trend a little bit, but it's nice to be able to get in sometimes early on those trades. If you're wrong, though, you're going to take a little bit of a hit, but typically not too big of one because these engulfing candles are not massive. Typically, at least, are not massive. Rick, you want me to go ahead and you want to take a breather while I take the roll reversal?
You bet. Run with it.
Okay, and thanks, Farshad, for the question. Appreciate that. So what the roll reversal position is basically we're looking at a bullish trend here, and we're looking at stocks that are pushing higher and then failing at a certain point, pushing higher and failing at a certain point. Thank you, Rick. So the push higher is, of course, what we want, but the fail is not what we want. So if it continues to fail there, I don't want to get into a position that's going to run up again and fail. What I want to do is I want to get into a position that can run up and burst through. Now, bursting through on momentum is always a nice thing because that's a good entry point. And Rick, if you could lower your cursor just a little bit here right below there. So as it bursts through that resistance level, now I'll often take a trade there and I'll put a support level, I'll put a stop order right below that resistance level because that resistance level is now going to be a support level. So we have a roll reversal. Resistance becomes support. So right above where I am of the aggressive trade there, what I mean by aggressive is that that's getting in early. So I'm speculating at that point in time, but I'm also comfortable about where I place my stop. Now, what a lot of folks will do is they'll actually wait for a pullback right above the S there, a pullback and then a pivot. So it pulled back to support and pivoted back to the upside as their opportunity to get in. Now, I might take that opportunity to add to the position. So I like to be aggressive, but I love to go ahead and see confirmation of this new roll reversal point, which is exactly what's going on here at the S level. We come down the old resistance level, the old ceiling is now acting as a floor. It bounces, it pivots, and it begins to go back up again. That is the point in which I would take a larger position because there's some confirmation there by that bounce and a roll reversal point.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.